Hello smart money traders, welcome back to the channel. In this video I want to take time and show you some of the top secret ICT trade entry models. If you are still struggling with getting the best trade entry model, in this video I'm going to demystify everything for you. So if you are a beginner in ICT concept, you can find beginners related videos on my YouTube channel. I'm not going to go into the very basic because this video will just focus on getting you the best entry models that will help you to trade. I have some of the sketches right here that will help us to get the best explanation. After doing that, we'll come to our chart and do practicals to check how these things work. So right here I have something called time and price. This is the most important element in trading. Now looking at what is happening from here to here, price is delivering liquidity from here to here. Normally if we are trading, we focus on very important aspect of trading: market structure, institutional reference point. So look at this, price was delivered from here to here and then came back into this area, broke this structure right here. At this point we had a break of structure, this particular place. So ideally if you are trading, what you do is that if price breaks structure around here, takes external range liquidity, price is going to come back to an internal range liquidity and then look for a point of interest. This point of interest must pass through some very important checklists and requirements. Now in this delivery from here to here, we can measure the movement from here to here with our Fibonacci tool and bring in the concept of premium and discount. If our point of interest is in a discount area while we are in a bearish market, as you can see this is a downward movement, our point of interest is in discount area, it is not valid, it must be at premium. With our Fibonacci tool, we know that the middle of our Fibonacci tool is called equilibrium. Anything above it is called premium, anything below it is called discount. Our point of interest is marked with this yellow shaded portion. We can have either an order block, a fair value gap, as you can see all of these things right here. Now as price is coming back, we want to mitigate our losses in such a way that we can jump down to the lower time frame and look out for this retracement. I've taught this time and again, but please make sure you watch this to the end because you're going to learn something new in this particular video. This retracement is what we want to focus on to get the best entry model. So in this retracement, let's assume this is happening in the daily time frame. Okay, let's assume this movement is happening in the daily time frame. This is the daily time frame. If we drop down to a time frame lower or two time frame lower, let's say we drop down to the 4-hour time frame, this particular retracement, we're going to see it differently. It is not going to be as smooth as you see it like this. It is going to be like this, something like this: move, retrace, move, retrace, move, retrace, move, and then you will have something like this. Okay, so in this simple retracement that we see happening, we're going to find this kind of price delivery. Okay, so and this is where these our 4 entry models come into reality. So you can actually see that in this retracement, as price comes back to our point of interest, we want to see one of these patterns formed at the exact area, except we see this. I'm not going to take too much of theory. Let me go to the chart so I can show you exactly what I'm saying. So this is my chart. Okay, so look at what is happening here. Price has been trending down from here to this area. So let's look at exactly what is happening here. Let's take this price delivery. We have this break of structure right at this point. I hope you're seeing this clearly. Let me just expand it a bit. We have this break of structure, and what is our time frame? 4 hour. If we are watching this from this 4-hour time frame, we know our bias is bearish. We have this. We don't have an idea of what is happening here, of what has happened. So this is what we are seeing practically from our chart. Break of structure. Where is our point of interest? Our point of interest is basically this. This is a bearish order block. We call it a point of interest. That is where price will eventually go back to. Okay, and now this is where this concept of this thing comes. Let me show you that particular movement that I just sketched right here. So I just dragged this particular, sketch to this particular place. So this is what we want to see happen before we can take trade. As this retracement is coming, we're not going to see it like this in this time frame, and that is why we drop down to a lower time frame so we can see the rhythm of the market, because this entire retracement in the older time frame, that's the lower time frame, is a bullish trend for people that are trading in the lower time frame. Okay, so this is what we are expecting to see happen. So if we drop down to maybe 1 hour or 15 minutes, depending on what we are seeing. So let me show you that as price is retracing now in the 1 hour time frame, let me just make everything happen so you can see exactly what I'm saying. So look at what happened now. Okay, look at what happened, guys. Our point of interest is still marked at this level, and look at what happened. Price had this movement coming back, and remember our premium and our discount from here to here. Let me go back to the 4 hour time frame so I can get the premium and discount, okay, level. So this is our premium and discount level from here to here. Let me even adjust it to this point. Look at this, our premium and discount from here to this lowest area. Okay, so we are waiting for price to come back to a premium area because we are in a bearish market, and this is why we drop down to the 1 hour time frame and wait for this retracement. As retracement is coming, and we're going to watch this happen. Okay, we're going to watch it happen. So look at this, price is coming into our premium zone, so we will watch price delivering this liquidity in this format. We have this breakout structure here. Okay, can you see what I'm saying? Breakout structure forming a higher high, another breakout structure right here. Look at what happened. As price came close to our point of interest, it must not necessarily touch the point of interest. As price comes right here, look at what happened. Had this sudden crash into this area. Does this looks like some of the models we have sketched there? Exactly, it looks like some of the models we have sketched there. This is shift in market structure. Okay, so look at what happened. Price takes liquidity above here, crashed into this area. This is the last higher low that was formed at this point. So this is a shift in market structure. That means if our higher time frame bias is bearish, now we're going to have a bearish lower time frame bias, which means we can confidently take trade because we know we have aligned between this guy and this guy, the higher time frame and then the lower time frame. Does this looks like this one of our entry models? Yes, it looks like these are our entry models. Some of them are here, you can actually see them. So look at them. We have this, we have this, we have this. So if price is going back, now we have several of these things to pay attention to. Okay, as price is going back, we can actually see that we have this, a fair value gap right here, and you can also have confluences of more than 1 or 2 institutional reference point. We have a fair value gap right here at this area, and then we have a breaker block. This is a breaker block right here, a confluence coming in. So this gives me more confidence that this area is where I want to use for entry. So if I'm taking my entry from here for the sell, okay, from here for the sell, I can confidently say that price will work in my favor. My target is basically below the recent low, and that's exactly where I'm going to target. You can bring your stop loss to here, you can bring it to above this level. As you watch it, you will learn it by experience. Okay, so just keep practicing this and you will see how this happens. But you must make sure you have this shift in market structure, just like forming that pattern. This is the exact pattern we've formed here. Something like this, moved up like this, crashed, and we're waiting for price now to come back to this area. We have more than one confluence here. We have a breaker block and a fair value gap entry, just like these ones we have right there. Let me show you those ones. We have the one that has fair value gap and we have the one that has breaker block. So we don't necessarily have an order block in that area that we can say this is the order block. The order block is this small green candle, but I'm not expecting price to go there. Even if it goes there, then it's fine. Let's also mark it out. Okay, now if it were me, I can also drop to the lower time frame than this, even to 5 minutes or to 15 minutes. You're going to see the rhythm of the market, and that's where both top-down analysis and trade entry model comes in handy. So you watch this happen like this. You can see price actually touch this exact area where we put our breaker block and this particular this particular fair value gap. You see the tip of that fair value gap. I am supposed to enter from the tip of the fair value gap because that's where I'm watching it. Okay, so look at what is happening. Price is just doing exactly what you're watching. So you can actually see the pattern. We have a breaker block right here and we have a fair value gap. Now, to get an explanation about breaker block, I know it's the only thing you will find difficult in understanding. Please watch those videos I showed you right on this playlist, okay, so that you can get everything I'm explaining. So this is the kind of entry you want to watch out for. Now, even if you go down to the lower time frame, okay, even if you go down to the lower time frame, you're going to see more better detail. That means you go down to the lowest time frame. If I take out this delivery, you're also going to see that this small movement in the lower time frame is an entire uptrend. If you go to the 5 minute, okay, it's an entire uptrend. So you can also wait for another shift in market structure in that uptrend before you can get an entry. Look at these prices moving. Let's watch it and see. You're going to see what I'm saying. Can you see shift in market structure? This is shift in market structure at this level in the lower time frame. So this is all in a way to get the lowest level where your risk is minimized and getting the best of it. This is shift in market structure. And then look at this order block. This particular order block is what I want to use for my entry as price comes back to it. This is my entry now. So you can actually see that now your risk has reduced because your stop loss is just above the order block and your entry is there. So in the lower time frame, your risk reduces and you get a better entry. Depending on how you practice it, you're actually going to see this happen time and again. So this order block can have price come back to it as soon as I see these candle prints and had that shift in market structure. The tip of that order block can be my entry and see how price, okay, it actually take me in. So you can actually see that price is doing exactly what it's supposed to do. Okay, so this is the simple way people get the best entry with the lowest risks attached to it. So you're going to see this time and again. Let me do more examples so we can have those in detail. Going back to the 4-hour time frame, we can see that we have more details. Let me just delete this guy and have all the chart again. So let's see again that area we were dealing with. This area. So look at what I was saying. Look at this. Before this example we did right now, look at this. This is another example that we can pay attention to. We have a break of structure to the downside. Break of structure still in our 4-hour time frame. You can use it on 1-hour time frame. You can use it on the daily. Any time frame possible, you can use it. So look at this happening. We have this movement. Let me take out some of the data that we have right here. This data must not be there. Okay, this data must not be there. So assuming we have this price movement, we have this break of market structure, price is coming back into our point of interest. Where is our point of interest? This order block, big order block right there. Okay, this is our point of interest. What we do is that we drop down to the lower time frame and watch for that retracement to come in. Can you see the retracement coming in? Did we see any of those patterns we've just sketched down there? No, there is no one of those patterns here. So that is why we need to watch out to see how it plays out. Okay, so this is happening right here. We did not see any of those things happen. That's any of those patterns we've sketched down there. So in some scenarios you may not see it, in some scenarios you will see it, but having one of those is the best way to minimize your risk, because sometimes you can blindly enter and then price takes you out before going down, and that is why you wait for that. Let's see if we can see, like in this case, look at it. It happened right here, shift in structure. Thus we have an alignment between the higher time frame and the lower time frame. We have both bearish and bearish. But did we see price come back? It never came back, and that's okay. Just let it be. It never came back to give us an entry. Just let it be. You don't want to enter blindly. Let me show you an example of what happens when you take trades just because you see it from the time frame of your trading and then you get stopped out. Let's see if we can find one of those things that we can give example with. Okay, so let me show you where that thing comes in handy. Look at what happened right here. We have something like this, a break of structure at this exact point, which means price is moving up. So look at what happened. If I take out some of this data right here, let me just take it out so you can see exactly what I'm saying. If you take out this data here, right at that point, so for those of you that are trading like this, after you saw this thing happen, your order block is here, which is your point of interest. And then you have this premium and discount already given to you. Your point of interest is at discount area. So if you blindly enter from here, let me show you. If you blindly enter from here, probably your stop loss is below this order block, just below it, and then your take profit is somewhere above. Okay, look at what happened. You will eventually get stopped out. Okay, you will eventually get stopped out before price starts moving in your direction, and it actually worked in your favor, but you got it wrong. You did not take cognizance of exactly what I'm showing you in that particular example. So if we mark out this area, this particular area, I'm showing you this area, and zoom it in the lower time frame, you're going to see that it gives you exactly some of those patterns I showed you there, coming back to the 1 hour time frame. Price was coming down and we were patiently waiting to see this happen and give us the best kind of entry we are looking for. This is our point of interest. As price reached our point of interest, you can actually see that it pushed below our point of interest right here. But the advantage we have right here is that we're in the lower time frame. We are watching it happen. For those people that decided to enter from the higher time frame, they got stopped out. And we have this pattern formation. Can you see? Price came, had this push again, had this, and then complete pushed to this level. Okay, complete push to this level, or even to this particular level, this area, this level, just at this level. So we have this is our mitigation block right here. Let me show you. This is a mitigation block at this point. Price actually came back and tested from here. If your entry is from here, let me show you that. If your entry is somewhere from this level, you're going to see exactly what I'm saying. Your entry is somewhere from here. This is your buy entry at this point, and your stop loss can be here, it can be here. Normally I put my own below this swing, so I target the higher level. So this is the only reason why we do that. So you can actually see that price actually gave me exactly what I'm looking for. So that is why you need this dropping down into the lower time frame, and you need those pattern formation before you have an entry. You're going to see this happen time and again. As you practice, you're going to see it happening time and again. So let me see if I can see the last example I can give us, so we can close this particular video from here. If I can see another example that is handy. Okay, so let's check the last example we're going to do before I close this. Okay, so look at what happened right here. We have this shift in market structure from this level. Price moved to that area. Okay, price actually moved to that area. So your point of interest is going to be very important in this regard. This is your point of interest, number one. And we also have another point of interest. All these are point of interest, because if we measure from here to here, this is also at a discount, this is also at a discount, and that is where this comes in handy. We go down to the lower time frame, we watch the retracement happen. So we're going to watch this retracement come in carefully. We'll just watch it from the lower time frame and give us that pattern we are looking for. We'll patiently wait for it to happen. Okay, look at what happened right here. Price came to our point of interest at this point. You can take trade from here, but it's more riskier than waiting for what happened here. So price came, and look at this complete shift in market structure with this pattern. This is that exact pattern we designed down there, but this is in the opposite way. That was like an M. This is in the opposite way because we are dealing with a bullish movement. So look at it, this entire price movement. Let me take out this guy. You can actually see that price is coming back to retest this mitigation block here, and we can have a confluence of mitigation block and a fair value gap, just like we see this happen right here. A mitigation block at this point. Let me just change the color of this so you can see it properly. We have this mitigation block at this point, and then look at a fair value gap right here. This is a fair value gap, a very big one. Okay, so does that give you an idea of what happens every time you're taking trade? You're taking this because you want to minimize your risks and you want to have an idea of what is happening. So this is your entry. Your stop loss is basically below here, your take profit is above. Okay, I would like to keep my stop loss somewhere below here, and you can watch this happen time and again and be confident with the trade because you know exactly what you're doing. You're not just taking trade arbitrarily. So guys, this is all about this video. I'm not going to go into so many examples. Be sure you try it, and if you find it working, let me know in the comments. Thank you guys for watching. See you in my next video.